Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand all the latest cues from the stock markets, the way the benchmark indices are trading at this point in time. Also, what is the larger trend in the broader markets as well, and what's really happening with the Adani group of stocks that has been continuously in the news as well. We'll also get you all the expert take on all of these fronts and much more. But first up, a quick check on how the markets are trading. Well, it's a subdued day for the markets. A lackluster trade is what you can really spot on the Sensex, 64 points down, 60,598 as the current level for the Sensex. The Nifty also hovering 40 points lower. About 0.2% of a cut is what you can spot right there, 17,832. That's the level at which the Nifty 50 is really trading at. Look at the broader markets as well and see whether the broader markets are actually showing any kind of a move on the upside. So it's a mixed trend that you can spot, especially in the mid-cap space. It's flattish move right here amid all that choppiness that you've been spotting from the opening trade today. The small cap index is actually slightly lower, 0.2% of a decline for that one as well, again amid the choppiness, so lackluster move on that front too. The India VIX is at 13.5, not too much of a volatility for that one on the expiry session too. But in terms of the sectors, you have only two bright spots, the IT stocks and the media stocks that are up in the green, but rest of the sectors are actually seeing quite a bit of a slip today, especially the metals pack that was up about 3.5–4% yesterday. That's looking at some profit booking taking place, about 2% down for the metal index. Apart from this, all of the sectors are actually down in the range between about 0.2% to 0.5% for most of these indices. So pressure coming along all the way. In terms of the market breadth, it's divided between the advance and declines. When you talk about the top 50 Nifty stocks, so 24 advances to 25 declines at this point in time. In terms of the top losers today, Adani Enterprises and Adani Ports are seeing some cuts right again after those 2 days of sharp gains on the upside. Of course, overhang of the MSCI review is something that is really playing up right here. In fact, when you talk about the top, the Adani 10 stocks that are listed on the exchanges, about 8 or 9 odd of those stocks are actually trading with some cuts today. Hero MotoCorp, Bharti Airtel and Bajaj Auto are the other laggards at this point in time. What's really doing well in this otherwise lackluster market? The Bajaj twins, Bajaj Finserv and Finance, up about 1.5 to 2.5%. HDFC Life continues its upward run for the second day in a row. Asian Paints and SBI Life also up by about 1%. Time now to welcome our guest for the day. Rahul Shah joins in from Motilal Oswal Financial Services. Rahul, welcome and good afternoon to you. Thank you so much for taking the time out. Well, overall, how are you looking at the market setup? And we'll also come to the Adani group of stocks. But overall, what is the sentiment really telling you?
Hi, good afternoon. I think the sentiments, post-budget, I think what we have been talking about, I think the things have been better itself. I think if the people were looking at the RBI policy and post that, obviously it was discounted at 25 basis point and paused for some while. So I think that's what it is. And I think most importantly, I think we look at it, the budget, what it was more about, the growth oriented path. So we feel that I think the corporate earnings of Q3 was quite good, I think, which was as per an expected guidelines, right? So in the sectors where the visibility of earnings are there, I think those sectors will continue to outperform going forward from here. So I think the financials being, is one of the sector, I think, which has been outperformer in last 6 months. And I think the visibility of earning post Q3 also looks interesting. So my sense is, I think BFSI, IT also have, if you look at it last couple of days, I think we've been seeing post numbers. I think some renewed buying has been seen in most of the IT companies. So I think what it looks like is, I think worst is behind that. So there also, I think one can start cherry picking the stocks from the IT sector as well. And most importantly, I think the one sector, I think, which, has been on a consistent decline, I think, as a new age tech businesses, where we've seen some rebounds post Paytm's number, I think, coming back into a bit of positive. I think we've seen the renewed interest coming back into that sector. So I think these are the three sectors one should look at it at a near-term perspective.
All right, so some of these pockets showing some promising signs for a fresh buying opportunity, including IT and the new age stocks amid all this rebound. But I want to actually focus on the Adani group of stocks. We have seen, considerable wealth destruction in the last week, and then there was a sharp bounce in the early 2-3 sessions of this week as well, with about 20–30% of a rise, 35% of a rise in just 2-3 sessions also, and none of it was expected, neither the fall and nor the rise that we actually saw. Again, on the development front, what we have seen is that again today there's a cut of almost 10, 15 odd percent on some of those stocks today. Adani Ports, Adani Enterprises really slipping away after 2 days of gains, and that's after the MSCI decided to review the free float status as well. It's going to be reviewing that for the group after the market participants have raised concerns about the eligibility of the companies in the Gautam Adani-led group of indices as well. In fact, MSCI has determined that the characteristics of certain investors have sufficient uncertainty that they should no longer be designated as free float pursuant to our methodology. And this is what they have said. I want to understand from you, what does it really mean? How should investors really understand this move by the MSCI? And, looking at the kind of fall that we have seen today, then how should one really view these Adani group of stocks? Is it a dip that should be bought, or is it still time to stay away from Adani group of stocks amid all this development?
I think one thing is clear. I think the MSCI rebalancing happens into that, where they have a strict formula which is driven into it and which they follow it regularly. And we've seen that every month or whenever we see that addition and deletions and selling in those shares. So which will happen proactively. So there's nothing to comment on those things. So I think that is on an auto mode. So that will keep on happening. Secondly, whether to buy Adani stocks or not. So we don't cover any of the stocks out of it. But if you have to look at it, I think Ambuja Cement, I think at a lower level looks interesting, but I think we have to review the entire perspective. So if I value the cement business vis-a-vis the Ultratech or any other large companies, so I don't think so that the valuation wise, I think still Ultratech looks much better vis-a-vis Ambuja Cements if you have to play a cement story into it. So my sense is I think one should avoid or maybe looking at it, we don't recommend any of the Adani stocks,
Sure.
so it would be difficult to comment on that.
Absolutely. Just to understand a little bit deeper on the impact of this MSCI review, I mean, we do know that out of all these 10 indices, about 8 indices or 8 stocks from the Adani group are a part of the MSCI Global Standard Index. Now, out of these, what could really happen in terms of the weightage? What kind of a weightage can one really see getting reduced right there? And therefore, what kind of an outflow can one really expect because of this?
I think what kind of outflow, I haven't looked at the numbers to give you the perfect numbers on what kind of outflow will come out from these things. So but I think they will obviously get the entire figure about it. What would be the addition and deletion, which will be in the public domain through most of the services. So I think we'll come back to you on this.
Okay, understood that. So largely still developments taking place, and we'll have to be in a wait and watch mode to really figure out what really is next coming up for the Adani group of stocks. In fact, as a news flow to help all our viewers really understand right there too, I think the Supreme Court has now agreed to hear a plea seeking probe into the Hindenburg research report on the Adani firms as well. So there is going to be some jurisdictional kind of move that one can really expect on that front as well. So developments will be coming flowing in as well, and we'll keep a track of all of that. But let's go in focus on the larger market data as well. In fact, we've just seen the mutual fund data also come in, where the SIP inflows are again at a record high of 13,856 odd crore rupees. In fact, the net equity inflow has seen a substantial move, on a month-on-month basis as well. What is the sense that you're getting, Rahul? Of course, the domestic investors have been continuing to put their focus in the Indian equities throughout the uncertain period and the roller coaster ride in 2022, and especially these SIP flows are continuing despite all of these macroeconomic concerns that we are looking at and the volatile moves in the markets throughout. Which are the pockets that investors are likely to really keep their focus on going forward in the entire 2023 here, and where is this money really flowing into?
I think retail and domestic institutions have become the large part of the markets now. If you look at it in last year, if I look at the FI selling data, it was fully absorbed by, if you look at 2022 Jan till December 2022, if you look at the way the FIs have relentlessly sold the stocks, and then I think and the markets distractions were hardly 3-4% if I look at it from year till the closure. So which itself indicates, I think the retail and the domestic guys have been, domestic, and obviously domestic through the participation of this retail SIPs and all, and obviously direct investing through this mutual fund platform. So I think they've been an integral part of it. And I think they have been following this superb process of investing, continuous process. So I think this will continue what the investors look like. And I think that the newer generations, and as we see the number of people and opening their demats and trading accounts, so on and so on. So we are seeing the larger part of markets coming into the equity as a segment. So my sense is I think this will continue for a few years as well from here, and we will follow what which is their invest, which is comes here as well. So I think compared to other global nations, I think we have a smaller pie of the investors, but now which has been increasing on large basis. So which is a welcome step. Secondly, I think the sectors or of focus which investors should look at. I think one is obviously one should have a longer term horizon when you are into the markets, and obviously through a mutual fund route if you've invested. I think obviously 3 to 4 years the horizon one should look at it. And this year, if I have to talk about it, I think one thing is clear. I think we've been talking about the in a couple of quarters back, we were talking about inflation, we were talking about the interest rates, we were talking about the oil prices, we're talking about the war, and so on and on. So I think all this talks, what we've been talking about, I think most of them have been defeated. If you look at inflations have picked out, oil prices have picked out for the near term. Right. And I think global worry on terms of slowdown, if we see most of the indices coming back to near to their all-time highs. If you look at
Okay.
European nations, if you look at US, they're down just 3-4% from their all-time highs. So I think things looks like I think coming up rosy, and obviously the earning cycles have recovered. And I think if we see the way the macro indicators which are indicating the things have been better as well. So I feel that I think the things market should be good enough for like at least for a year and a half.
Right. So, Rahul, your top 2 or 3 picks, if you could suggest to all our viewers, where are you keeping your focus on in terms of stock specific action where one can really expect some sharp returns even in this kind of a market?
So my thought process is, I think I feel that banks, as I started the conversation, also I feel that the banks are one of the best play to invest into it. So I feel PSU banks look so very interesting from here and on also. So I think Canara Bank and Bank of Baroda both are trading, at a very attractive valuations. If I talk about Bank of Baroda first, I think the numbers were pretty strong. Q3 numbers were pretty strong. Quarter and quarter, year on year, margins have improved. If I look at TIMS have improved, as well as the asset qualities has been better. So stock available at point 0.8 value, point 0.8 book valuations, FY24 adjusted, and the stock is available at 5 times earnings. So I feel an easy 40% upside. One should look at it, where the triggers have been for the bank. Similarly, for the Canara Bank as well, the strong numbers for Q3. Same way, or the last quarter, year on year, and things have been much better for that. Again, available at point 0.8 time book, so looks quite interesting as well. So I think both the stocks, one can make a decent return. So that would be my top pick in such markets.
Okay, so the banks are going to be in focus, and Canara Bank and Bank of Baroda is the top picks for Rahul in this current market. About a 40% upside on Bank of Baroda is what he expects from the current levels. Positive earnings as well as the asset quality improving. Some of the key triggers that can aid this upside rally from on these two particular stocks. So thank you so much, Rahul, for being with us on the show and
My
helping us with
pleasure.
your insights on the markets and overall the various topics that we discussed. Let's look at the markets as well. About 50 points of a decline on the Sensex right now. It's actually moving, quite lackluster is what you can really spot at this point in time. But it is the weekly expiry, so we'll have to keep an eye out in the last 1.5 hours or so if there is any move on either of the direction in the markets right there. The Nifty also just down about 30 odd points at 17,839. So we'll keep a track of how the markets are moving and all the developments on the Adani group of stocks as well to help you with all the perspective from various experts who will continue to join us throughout the day. But do stay tuned on to with us on Business Today TV. Don't forget to subscribe to the channel and also stick with us via our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.
When it comes to harnessing the power of sun, India ranks 4th in solar PV deployment across the globe, with total installed solar power capacity reaching around 62 gigawatts. Join this journey of making the planet brighter and cleaner at Sterling and Wilson and Business Today present, Scripting a Renewable Future, 10th of February.